Welcome to Private Banking Strategies Podcast with Vance, Lowe, and Seth Hicks, your secret weapon to protect your assets and never have to start over financially again. Vance and Seth help high net worth individuals, families, business owners, and investors structure an asset-protected, tax-free fortress for their families. Learn how to keep what you earn and use the velocity of money to create your own private banking system. Join us on this journey as we explore the secret strategies of the rich and political elite and help you take total control of your financial security. Now, on to the show.
Hello and welcome to Private Banking Strategies with Vance Lowe and Seth Hicks. Vance, how are you today?
I'm doing great. It's a wonderful day out here today.
Fantastic. We're going to jump right in. We're going to be talking today about protecting the family bank, structuring with risk management and asset protection, legal structure framework in mind. And we've talked about this in so many different aspects, but we generally don't talk from an asset protection standpoint, although it's one of the primary pillars. And the law provides protections, or some states a lack of protection, governed by the state. But what we're going to dig into is more of how to shield properly and structure your wealth inside your bank as you do transactions and as you employ the banking procedures. So wealth, I think, is not necessarily always lost primarily because of bad investments. It's also lost through poor structure.
As you were talking, something came into mind. I call it the 85%. We put 85% of the effort in most of the time, but we never finish. We don't quite get to that 95, 98 to a total effort. And if I look at baseball players, the difference between the minor leagues and the major leagues is that amount of effort. They're all good. A lot of them can hit home runs, but it's the consistent ones that make it to the top. And for us in everyday life in banking, it doesn't mean we have to be that, but we do have to put our structure together so that we know it, so that we're proud of it. We know both sides in and out. We know what we're doing. We know where we want to go. And so today, this protecting side is vital. For those of you who put the effort in to set up your own foundation, by foundation, I mean your own structure financially, if we don't take care of the risk factor here, it could end up, the wolf could get into the hen house and just destroy everything all at one time.
Many times you'll see folks make a bad investment and that was a loser. But many times you've got the ability to plan for taxes. One of the things you show folks is how to use your banking to actually meet tax liabilities, and how you're actually got those and you're using the tax liabilities as a way to generate streams of income on your banking policies with that payment. That's a way that we set up structure. So That's one of the type of ways that we're talking about. In your business transactions, properly securing collateral and having collateralized transactions when you're going to make loans to third parties or you have some type of cash flow coming. Those are very important structures to implement to create safety.
Absolutely. Protecting the principal legal structure, all of that is all depending on our circumstance. The nice thing is this strategy adapts to any environment, any situation that an individual could be in, as if he's a business owner, she's a business owner, it's a family affair, if it's just an individual first starting out. The strategy will fit and can be built accordingly. So I think maybe the first part, Seth, is assessing maybe risk, where risk could hit us.
Sure.
You're talking about maybe families. Where does the risk come from?
Yeah, the purpose of the protection and structure comes from risks that various places: creditor risk, lawsuit, business litigation, business disputes. Let's say you buy a business and the seller represents and warrants that the business is in a certain financial health and that the employees will continue to perform, and some things they may or may not be able to actually produce on. But if you've got the structure in your transaction and you've got your banking procedures set up and you've got the transaction buttoned up, I'd say, in from a 30,000 foot overview, you'll mitigate those risks. You've got one of the biggest risk that families face, we talk about all the time, is taxation, and how to plan for the taxation and how to get the private economy in a tax-free environment working for you.
Yeah,
So
I agree with that. Taxes are such a huge drain. I had real hopes in our economy with President Trump and the import taxes, only to come find out that our Supreme Court struck it down. Now our government's having to pay back tons of taxes that were owed. Could have been the solution for our individual taxation right there. Support your government, tell your government where you want, but you don't want to pay taxes. You want to get it from someplace else because those taxes started our country. That's where our country government had surpluses all the time. We never needed any other type of income tax. We still don't if we can get those things right. Yeah, that's
right.
probably our biggest exposure because they can change the law anytime.
Sure. We've got 4 areas I want to lay out for protection in the policy structure. We've got a free resource for folks that actually helps understand what a particular state law is and how it applies to life insurance contracts in that state. If you want a copy of that, folks, email us at info@privatebankingstrategies.com and we'll send that resource and just say free resource and in the subject line, and we can send that to you. But one of the primary aspects of life insurance contracts being governed by the state is that they set protections in many states, especially southern states, that provide 100% protection from a creditor attack, lawsuits, business disputes, divorce, probate. All of those various risks are protected in states like Texas and Florida and many southern states. And so that is a huge cornerstone in the structure, is when you have those states on your corner.
Seth, let's drill down on that. What does that really mean to the average individual? If they get one of these contracts, what does that mean to them and the protection that it affords them?
You've got your money growing and compounding in a tax-free economy, and it is effectively untouchable by creditors after the fact or attacks after the fact. And I recognized this strategy with real estate development in Texas, for example. Saw developers using life insurance contracts as a storehouse for cash flow and also a place where they stored wealth. And Texas allowed the protections of those contracts to be 100% protected. Now compare that with if you keep your money in a traditional bank. There are no protections from creditors there's no tax-free economy according to the rules that the IRS has put in place. You're not free from lawsuit attack, business disputes, probate, or any other type of exposure. So that's a huge one.
Yeah, literally, it's almost like it's public versus non-public. There's so many benefits of storing your money in a private money warehouse. That's what these contracts will allow you to do in these life insurance companies. You become a company owner when the benefits are great, as well as staying pace or even outperforming long-term the stock market. So storing money is a great safe haven. Once we store money, once we have our basis, our foundation, then we can look to bring on additional risk with some of that money by leveraging it. But you've got to have that foundation. You've got to know the law and get it set up in such a way that I don't have to worry about that. And that's why I think this type of law, we dwell into it just a little bit. There's just so many freebies with it. There's so many advantages versus not having it is astronomical, I think. So that's one of the 4 that we're really getting into. Let's keep going, Seth, and see what else we've got there.
Sure. I think the ownership of how contracts are held become really important with a family legacy plan in place, 100-year family legacy plan. The ownership structure begins to be more critical so that committee governance of children and grandchildren who come into authority can govern the bank and implement many of the procedures and policy standard operating procedures that we've talked about and outlined so that it works smoothly. That's a big piece.
And I've seen the ownership, and maybe this will cross over a little bit more. If it's set up wrong or if gaps are left out, let's say you've got 4 kids and they've got kids now, and if not set up so that the bank can prosper, one person can pull it down or at least delay it to a point that it's not cohesive, productive for the rest of the family. So I think that ownership needs to be well thought out and the procedure of how that will remain and continue.
And one of the primary ways that's done is with the patriarch and matriarch founders of the banking system setting and implementing a roadmap in place. And it gives people that are coming behind them, their children and grandchildren, a governance structure. It explains how we make loans for what we don't make loans for. We don't make loans for consumptive and speculative purposes. We're always going to get the money back. We're not going to steal the peas and go out the back door. And everyone has to play on that level playing field. And we've seen that implemented in different families. And it's a structure that each family has to work out for themselves based on their family dynamics. But that governance opens up access to use the family bank and access that money. And that benefits everyone in the family with every checkout at the front door with the groceries. It benefits the entire family.
Did that story feel like it was about you? Do you feel like you are generating a lot of revenue but are not moving forward as fast as you would like? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
I studied, nonprofit organizations, especially in Fort Worth. Years ago, I studied those because we would use some of that influence in some of the projects and works we did. But these were families who were absolutely wealthy, multimillionaires. In their backyard was their airplane landing strip. They had their own planes. They would fly to New York for lunch or for a shopping spree and fly themselves back in their own private little jets. And the structures that they left behind for nonprofit was because they didn't think their family was sophisticated enough to run it. Hey, kid, you don't get an inheritance. We're going to do this structure here, and this is the way it's going to be. So anywhere from full ownership from the patriarch group to more nonprofit organization where it's a structure, it's actually business, they actually make money. A lot of this that I was involved in before was for scholarships. They would provide certain groups of kids scholarships to go to college. And that's what the whole foundation was about. And all the earnings in that grew into that results. So I think the structure needs to be there if you want to have it multi-generational.
And the reason that the family you're talking about didn't have a legacy that really flowed for the benefit is because either those children weren't taught or didn't step up to learn. But if you implement those type of governing structures with your family and just say, this is the way it works, just like Nelson Nash did with his family, and said to have access to the family bank capital, you were going to work within these set of rules and parameters. And if you don't want to, then okay, then go make your way yourself. But this is a good way to have more access to capital, to finance business, to finance life, to be able to basically start from a higher level than you would if you've got to cut it all out yourself.
Yeah, I just wanted to mention that the Carter Foundation in Fort Worth started as a family owned company business. They became very wealthy in oil. And that Carter Foundation is still famous. It's still now in the billions. It continues to grow and provide a huge structure. I never was able to get into the private sector section of it for the actual family, but it seemed like, no, my family can't do it. I've lived my lifetime. I've tried. So what I'm going to do is this. So I don't know if a lot of people out there have heard of the Carter Foundation, but if you could look it up, you'll see a pretty good structure there.
You're right. That's where when policies are properly structured and the ownership is set up, you avoid unnecessary probate. You avoid unnecessary claims and lawsuits or business liabilities or estate tax
Taxes
issue.
are the biggest thing here. It's on the gains and the growth here. Huge.
That's right. And sometimes policies are owned in individual capacities, individual names. Sometimes they're owned in trust or other entities. Perhaps a company has employee policies, like we've talked about in many podcasts, as our traditional banks are known for having life insurance policies on all employees and banking $20-30 billion a year in annual premiums in life insurance on their employees. So maybe in an entity, a corporation or an LLC could be a trust, perhaps an ILET in some circumstances, when your wealth becomes great enough that you want to preserve the water of cash without paying taxes on it. But a lot of folks, they don't hit that threshold right now. If you're a married couple, it's 24 million is the threshold for federal estate taxes. So if you're over that, then the structure becomes even increasingly more important. But if under that threshold, it's a tax-free distribution.
Agreed. Some states carry that a lot more meaningfully. I heard that in California, they were even going to tax on retirement plans the interest now.
Yeah, I think one of the most aggressive states in the country, if not the most aggressive, in taking people's retirements and their benefits. And even when they move out of California, California apparently tries to take as much as they can from those people.
Yeah.
But the ownership structure with these policies are incredibly valuable. And so what we're describing is forethought, planning ahead as you begin to implement this and create a long-term roadmap and plan. That's where the design ensures that you've got continuity, tax efficiency, you've got internal control with governance, and effectively created a plan that is optimized for your family.
Yeah, that's exactly what I think people want to do. They want to be thorough and perfect. Excuse me. Every once in a while, I have a wild hair and I want to do a little recording for sound bites or whatever. And this effort keeps coming back to me. The problems that I deal with clients is that we're 85% of the way. We need to get done what we're supposed to do. We need to do it efficiently. We need to do it at the right time. Instead of reacting, we're acting. That's another way to put it. Most of us live our lives reacting to things that happen, but the top people, the successful people, act. They don't react. They set the pace. They set the tone. They decide on the ownership. This is the way we're going to go. We're going forward. They complete it. So once the ownership is set up and completed, no matter what and where we're at, we can advise, but they can get legal advice or whatever else. But in the banking concept, it's pretty simple. It's not complicated at all. They set that up. They get that structure set up. What's the next step?
I think that having your beneficiaries outlined and understanding primary beneficiaries and how the flow moves in a multi-generational continuity is super important. And that is going to come into structure like with trust and having the death benefits of a patriarch or matriarch be paid into a trust, which then is governed by a trusteeship or a co-trusteeship, a board perhaps, that implement the rules. And so that primary beneficiary on the founding policies is important, that it goes to the right place and not the wrong parties.
I have seen time and time again people who have thought things out well, who have built and tried their very, very best. I liken it like climbing a ladder. They just avoided or missed one or two of the details, and they climb this ladder of success. They get right almost to the top, to a point where they're having a lifestyle change. A lot of people call it retirement. They are up there on this wall, and they look, and they discover they're on the wrong wall. And folks, do you understand what I'm saying here? If you find yourself that you set it up wrong, in order to get to the right wall, you have to descend and climb another ladder. So that depends on how old we are, whether we want to do that or not. But structure everything, because that gives us the longevity, it gives us the outline, it gives us the power, I think, in that ownership to be able to make that happen.
That's right. And once you've got those things defined in the beginning, it's very easy just to have everyone flow with the roadmap and the plan. And that's not to say that it's not flexible enough to make changes. There's obviously, we can make changes in governance and operation, but that's incredibly important so that everybody is playing on the same level application. They're playing by the same rules. Those governance expectations between children and grandchildren, if they don't have to make those decisions in real time, they've already been set. They just follow the roadmap.
Yeah. So following that, I guess that kind of goes into governance, right? The way I think if there's a structure problem or if they have to address something, it comes into that third category of governing, making sure things are set right, that if there are changes that need to be made, they're made correctly, legally.
And that's another thing, folks, is we've got outlines and summary guidelines that help people decide how they're going to govern their banks and ideas of various aspects. And so we've got many clients that begin to take those outlines and modify them to fit their family, modify them to fit their planning. And that's the intent. If you want a resource like that, folks, hit us up at info@privatebankingstrategies.com and just put free resource in the title, and we can help you provide some of those resources for you, free resources. But that's where you're going to find just a wealth of information is on our website, folks, privatebankingstrategies.com. bankingstrategies.com. And there you'll have the opportunity to get a book that Vance and I authored, Secrets the Banks Don't Want You to Know. Put your name and email in. That'll be made available for you in PDF and audio immediately. And then if these things resonate with you, if this content resonates with you, if you like that book, then schedule an exploratory call with Vance. And you're going to have access to his calendar through emails that you get. And that's the only way you'll have access to his calendar. But I'd strongly encourage you to schedule an exploratory call and see how it might work for you. Vance, what happens in the exploratory call with folks?
We set up a test drive. We actually put your numbers in. We look at your structure the way it is now, and we project that out month by month over the next 8 years so that you can see by pulling in these strategies, which are totally different than the way you've been taught in the past. You learn about money. We put the money to work. We wake accounts up that you thought were working that are really asleep. We show you how doubling happens. We show you how to set up economies, your private economy, how that's not taxed anymore. So these are all structures that we think we know something about money, but if we set it up the correct way, the way banks are doing it, it opens up a world to us of growth that is unbelievable. So we discover that in the first that first meeting. Actually, that's the first presentation. The exploratory call we do is just to answer questions, ask where things are, see if you're actually ready and can do and handle a strategy like this.
Folks, thank you for joining us. We appreciate you sharing some time with us. Hope to see you on the next podcast, and let us know if you'd like some resources. info@privatebankingstrategies.com.
Thank you very much, and we look forward to having you back on future podcasts with us.
Bye for now.
Did that story feel like it was about you? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
Thank you for listening to the Private Banking Strategies podcast. Click the subscribe button below to be notified when new episodes become available.